So viewing what you owe, okay, and how to pay interest and penalties. These are the topics that you will see. Viewing what you owe, we have discussed multiple times. So this is something you already know. Okay, now on the personal side also, like the personal tax filing for an individual, that also something will be covered in this topic. Okay. So checking what you owe to HMRC, you might get issued a paper statement from HMRC, that is an employee. Okay. If you have a July payment on account to make, you get a statement at the end of May or beginning of June. Okay. Or it is for company as well. If you have a January payment to make, you would normally have done your tax return at the latest end of November, and then you will be able to get a paper statement. Okay. So there are two times payment, as I said. A half yearly you can do, and annually also it could be done. That is fine. Okay, so July, if you have a July payment on account, you get a statement at the end of May. Okay, so you get 2 months time, June and July. Okay, or beginning of June. If you have a January payment, then it will be coming on November. View via your online tax account. So you can use the online tax account, that will be the HMRC account that we have talked about, to go to your business tax account by entering ID and password, and you can find exactly how much you need to pay. Okay, sometimes it shows lump sum amount which can be paid in installments. You have to navigate down self-assessment by clicking on the business tax account. Okay, so it is for self-assessment. Okay, for the individuals and business. Okay, so this is just the explanation into donut, like how much you owe, and if tax is deducted, how much remains. So this is something you can read later on also. Paying an amount. After completing your self-assessment return, you can see your tax calculation and how much you will pay. Okay, there are two deadlines to pay this bill. Paying on time means you avoid being charged interest and a late penalty. So deadlines for submitting tax bill is January 31st. As we've seen, one is January 31st. So you'll receive that copy by November. Okay, November end or December start. 31st January for your tax bill from the previous year and first payment on account. 31st July for your second payment on account. Okay, so to avoid missing deadline, you can make an early payment also. That is, you should not wait till the end, and you know that at times the portal may not work. That is also possible. So you can pay regularly throughout the year by using a budget payment plan as well. Okay, like we have seen that EMI option that could be spread it through the year. Okay, 6 months, 6 months. For same day or next day payment, approving your payment through your online bank account, online or telephone banking, user faster payments, and then CHAPS that we have seen, the immediate payment mode, your debit or corporate credit card online. So these modes can be used. You can use a paying slip from HMRC at your bank also. So bank also helps you to pay HMRC directly if you go to the bank. Like we deposit in our accounts, they deposit in HMRC accounts. Okay, for payment to reach HMRC within 3 working days, you can use direct debit. Okay, and then backs that we have already seen, and you can send a check through post also, manual payment. So it takes almost 3 days. Okay, after paying, you can view your HMRC online account to check payment has been received. Okay, so HMRC will update your account, not after 3 days immediately, but you'll get, like, after 7 days you can check if the account has been updated or not. Okay, so it should show as paid within 7 working days. Interest and penalties. So let's see the interest and penalties. What kind of interest are there? Okay, so HMRC interest rates are mandated by law and are tied to the Bank of England base rate. Okay, there are two types of interest rate. One is late payment interest, one is repayment interest. Okay, so late payment will be charged for the payment we make to HMRC, and repayment is what HMRC gives us. Remember, I told you if we overpay to HMRC, they will give us some interest in return. For the days they keep the amount. Okay, so that is called repayment interest. It is the sum of base rate and 2.5%. Okay, this is something that may change also. The late payment penalty encourages timely payment. Okay, so why it is done? Because other companies or other individuals may say that why others are not charged, because they are paying late, so we will also pay late. So that is the reason it is important. As you know, in all the countries these are charged. It ensures that those who pay their taxes on time are treated fairly. Okay, then repayment interest set 1% less than the base rate with a lower limit of 0.5%. Okay, it depends on the situation, known as the minimum floor, 0.5%. Okay, when taxpayers overpay or pay early, the repayment interest rate fairly compensates them for the loss of use of their money. Okay, which is with the HMRC. The lower, you can stop me wherever you have questions. Okay, the lower limit for repayment interest, the lower repayment interest limit ensured that taxpayers receive 0.5%, as I said, even when the base rate fell to 0.1%. Okay, this is something that is managed by bank. Okay, so we don't need to get into detail about the base rate, but we get 0.5% minimum even if there is a changes in a base rate. Okay, until the Bank of England raises the base rate above 1.5%, repayment interest will be paid at 0.5%. So it can increase also. Okay, then it will rise in line with the base rate, whatever it should be. So you see, we pay more interest, but HMRC pays less interest. But it's good that HMRC pays. Okay, in some countries it is not paid by government if you overpay them.
Yes.
Okay, the following are the current late payment and repayment interest rates applied to the main taxes and duties on which HMRC currently charges and pays interest. Okay, from November 2022, the late payment interest rate is 5.50%. Okay, you remember there was a change in November, I told you.
Mm.
From November 2022, the repayment interest is 2%.
Mm.
Okay, this is revised. So if you see the trend from January, okay, it got changed to this in the November, that is from 2.75% to 5.50, which is the late payment, and repayment has been changed from 0.5 to 2%. You see, both are increased.
Mm.
Similarly, for corporation tax filing, also it is changed for all kind of tax. Okay, corporation tax self-assessment also it has been changed. Inheritance tax also it has been changed. Okay, default and statutory interest, that is related to VAT, air passenger duty, insurance premium tax, and environmental taxes. All the taxes have been changed. Okay, the percentage you see, it is the same. It is not different for any kind of taxes. The next topic that we have regarding tax reform. Okay, so the government is reforming penalties for late submission, late payment in order to make them more equitable and consistent across taxes. Initially, the charge changes will apply to VAT and income tax self-assessment, that is ITSA. Interest charges and repayment interest will be harmonized as part of this reform to bring VAT in line and other tax regimes, including ITSA. So we have seen those rates. The changes will apply to VAT customers for accounting periods beginning on or after January 2023. Okay, so it was this year. ITSA customers with business or property income exceeding pound 10,000 per year were mandated for making digital MTD for ITSA beginning on or after 6th April 2024, and all other ITSA customers beginning on 6th April 2025. Okay. Now, late payment penalties. The new late payment penalties will apply to VAT businesses and ITSA taxpayers who owe money. The new regime will replace the current late payment penalties in Schedule 56 of Finance Act 2009 for ITSA taxpayers. It will replace the default surcharge, which served as a combined late submission and late payment section for VAT businesses. Okay. Regardless of the tax regime, all taxpayers have a legal obligation to pay their tax by the due date. Otherwise, there are two late payment penalties that may apply. Okay, there are additional penalties also. So at first penalty, an additional or second penalty with an annualized penalty rate. Okay, so it is after some specific period, if the payment is still due, there will be additional penalty charged. So let's see what is this. The first penalty, if the outstanding tax is paid within the first 15 days after the due date, the taxpayer will not be penalized. Okay, so the grace period is of 15 days around. If the tax is not paid by the 15th day, the taxpayer is subject to pay to the first penalty. This penalty is 2% of the unpaid tax after day 15. If any of this tax remains unpaid after day 30, that is more 15 days. Okay, a penalty of 2% of the tax outstanding after 15 plus 2% of the tax outstanding at day 30 will be imposed. That is 4% in total. Okay, so this will result in 4% charge on day 30.
mm,
Okay, if it is still unpaid. Now, additional or second penalty. If the tax is not paid by day 31, okay, after the 30th, the taxpayer will begin to incur an additional penalty on the unpaid tax. Okay, it is calculated daily at a rate of 4% per year. Okay, on the outstanding amount. So this calculation is based on the annualized rate. When the taxpayer pays the overdue tax, the additional penalty will stop. Okay, now time to pay arrangements. This is the arrangement that HMRC has given, wherein the company or the person can contact HMRC and ask for some more grace period or some more time. So let's see what is this. HMRC will allow taxpayers to request a time to pay arrangement. This allows a taxpayer to avoid further penalty accrual by approaching HMRC and agreeing on a payment schedule for their outstanding tax. So if the person knows or the taxpayer knows that I'll need 10 days more, so they can buy a time for 10 days more. So then HMRC can agree and give that time, okay,
mm,
as a time to pay arrangement. If agreed, a TTP arrangement has the same effect as paying the tax and prevents penalties from accruing from the day the taxpayer approaches HMRC to agree it, as long as the taxpayer follows the terms of the TTP agreement. Okay, so even both parties will need to agree and follow whatever has been discussed. So effect of time to pay arrangements, let's see with the examples. Days after payment due date, okay, 0 to 15. If it is between 15 days, action by customer. Okay, payments made or TTP is proposed by day 15 and then agreed, no penalty is payable. Okay, so payments made or TTP is proposed, which means payment has been made or else TTP has been asked. Okay, in between by the day 15th. Okay, by the day 15, because on day 15, 2% starts accumulating. But there is a TTP arrangement, so there will be no penalty. Okay, then 16 to 30th day, payments made or TTP is proposed. Okay, by day 30 and then agreed.
mm,
Penalty will be calculated as half full percentage rate of 2%. So otherwise it would have been 4%. Remember? But there will be only 2% if payments are already made. Okay, or TTP is proposed by day 30. 30 is already late. If it is if it is requested before 30, then it could be something wherein a grace period could be given, but it is proposed by 30. So that 15 days penalty will be charged, that is 2%. Okay, so penalty will be calculated as half the full percentage rate, 2%. Now day 30, some tax is still unpaid and no TTP is agreed. Okay, some tax, some amount has already been paid, but by day 30, there is still some payment pending and there is no TTP agreed also. So full 4% will be charged. Okay, because there is no TTP. So 2% plus 2% only on the pending amount, not on the entire amount. Now let's see one more example. The taxpayer owes pound 1,000 and fails to pay it on time. Okay, on day 11, they approach HMRC and request a TTP arrangement and they later agree with HMRC on a payment schedule. By approaching HMRC for a TTP arrangement and then agreeing to one, the taxpayer receives the same benefit as paying the tax on day 11
mm,
because it is already late, like
mm,
11 day. So whatever will be due on 11,
mm,
okay, which the taxpayer will need to agree. Okay, so if taxpayer thinks that there will be a problem, they can approach early. Early stage will be better.
mm,
Okay, there will be no penalty because 0 to 15 days, okay, is a grace period.
mm,
Okay. On any outstanding amounts, late payment interest will be continue to accrue. Okay, if there is any outstanding amounts and which is like out of the TTP arrangement, after the TTP arrangement, like for example, uh, the taxpayer has asked for 11 days or 12 days grace period. So once the 12 days grace period has been passed, then whatever amount is outstanding, then interest will be accrued on that amount. Okay. Again, the taxpayer owes pound 1000 but does not pay by the deadline. Okay. They had already incurred the first 2% penalty, pound 20 by day 15. Okay, because they have not paid by the deadline. On day 20, they approach HMRC and request a TTP arrangement, and they later agree with HMRC on the repayment schedule. Okay, so it is already late, 20th day. The taxpayer receives the same benefit of paying the tax on day 20. Okay, by agreeing to a TTP arrangement. So whatever could have been uh, normal situation during 20th day, the same arrangement will be given to the taxpayer till the time they have agreed. Okay, they are in the same position as if they had to pay it on day 20. Okay, so whatever is due on day 20, that will be agreed, and whatever, if it is 5 days or 10 days, whatever has been asked, that grace period will be given. If HMRC has given you some date, for
Hmm.
example 5 days, so
Hmm.
you should make within 5 days, so that same interest will be charged. Otherwise, if you miss the 5 days, then the normal interest again will be accrued, whatever
Hmm.
it should be. Okay, so they are in the same position as if they had to pay it on 20th day. That is, the penalty will be 2% till the time it has been agreed. Okay, 5 days, 6 days, 10 days, whatever. It could be 30 days also. Like till 30th day, if TTP has been arranged, then only 2% will be charged, not 4%. Okay. The third situation will be this time the taxpayer failed to pay the tax by the deadline and has already incurred the first penalty of 4%. That is 30 days. Okay, they have yet to pay by day 40, and still 40 days is passed, and have incurred the additional or second penalty of 4% per year. Okay, on day 40 they approach HMRC and agreed on repayment schedule. So it will be same, they have to pay that much at least, because they have reached out late. If they would have reached on 30th day, so at least they could have saved that 4% per year interest. You understand? Only the
Hmm.
4% would have been charged. You understand? So that is the problem. Okay, so this way they can tackle it if they can foresee the situation.
Hmm.
Okay, special circumstances when HMRC does not assess a late payment penalty. There could be some situation they can support HMRC, and they can give you more time also, or they can remove the penalty as well. Okay, it is very less scenario where HMRC will remove the penalty or they will offset it. Okay, HMRC has the discretion power to reduce or waive a late penalty payment if it perceives appropriate in the special circumstances. This includes situations in which a taxpayer is forced to pay the tax late due to unforeseen circumstances. Okay, it could be possible due to some reason it has been delayed, not from the taxpayer side, but could be from government side, or the formality is not pending. They do not have the uh, responses on the one example could be they have appealed in court that this penalty is not right. So, or the payment, they have a discrepancy, so they already have appealed court or HMRC, so that is the decision still pending. So in that situation, that could be one situation where there is a dependency. Okay, there is a special situation. Okay, there could be some other legal matter due to which the payment is pending. Okay, so in this case HMRC may remove the penalty. Okay, or there could be some other scenario also, that depends on the scenario. Okay, if HMRC does not use its discretionary power or does not agree that a taxpayer has a reasonable excuse for late payment, the taxpayer must challenge the penalty through the appeals and review process. Okay, when the taxpayer's reasonable excuse for late payment expires, they will not be penalized if they pay tax on time. You can appeal this to HMRC, and if HMRC is not listening, you can go to court also. This happens mainly in the some discrepancies regarding the taxes. It could be possible when there is a uh, uh, higher scale industries, like higher scale companies where they have profit at very high level, so it could be possible. So taxes calculation could be wrong. So they can disagree with the calculation that HMRC has done. Possibly what could be the situation that the company has calculated some tax amount, but HMRC has not agreed to the tax amount, and they have uh, charge extra tax or different amount. So there could be a open case. You understand? So that could be possible. It could not be for entire amount, so it could be for the extra amount that HMRC has charged that is pending. So company might have paid the amount they have calculated. There could be any scenario. Now, special circumstances, we can see one or two examples also. HMRC understand that transitioning to the new system of late payment penalties will be a significant change for some customers. Okay, transitioning to the new system of late payment penalties. So it could be possible that HMRC is now changing in November. You see that November. So at that period, there could be possible that HMRC is not calculated properly according to company. The expectations are different, or they do not want to, like, it could be possible that their interest was different, but now due to the change in the interest, now they are charging extra interest. So company may not agree. So they may say that my payment is from last month, why you're charging the new interest rate, you understand, from the November. So this could be one reason. Okay, particularly those who may have more difficulty contacting HMRC. Okay, there could be possible that they were reaching out to HMRC for TTP arrangement or for any reason to explain, but there was a delay from HMRC side, due to which the new rates are applied now. Understand? So they may disagree. Okay, so there could be a negotiating, okay, payment to pay. So they might be contacting them for TTP arrangement, but there was no contact with HMRC within 15 days. So that is possible. As a result, HMRC will take a light touch with the initial 2% payment penalty for customers in the first year of the new systems operations under both VAT and ITSA. So we have seen that this has been changed in 2023. So this is the new year. So that during that transition also, if something has happened, so HMRC can give some what we say, leverage, okay, or may give some benefit to the taxpayer. So they can say that instead of 4%, just pay 2%. So or else will not charge you annual 4%, only pay the 4%. Okay, so that could be possible. They can have a letter also, the revised letter of the payment file. It will be in the portal also updated. So everything should be in email and official letters. Okay, mainly in UK they believe in letters. You know, like that culture is from UK only, that we write the letters.
Skill.
So the letters, the notices that is sent out to HMRC, okay, through a legal notice kind of papers will be issued by HMRC. So on that, appeal has been made in the similar way, a draft. Okay, so it could be through email also, it could be through a lawyer, like through a paper documentation, and everything will be updated in the HMRC portal. Okay, so the revision will be done in the portal, and they also send a communication. In such cases, they will give you a letter also. HMRC is very good with that. When a taxpayer is doing their best to comply, HMRC will not assess the first penalty of 2% after 15 days. Okay, that is also possible. Giving taxpayers 30 days to approach HMRC before HMRC charges a penalty in the first year. Okay. First year means the changes that we have seen, ITSA. However, if a taxpayer has not contacted HMRC, that is in the first year of their employment as well, it could be possible. Okay, it is the first financial year for the company also. Okay, that could be a situation as well. Or if a taxpayer has not contacted by HMRC by the end of day 30 and there is still an amount of tax owed, the first penalty of 2%, okay, of the amount owed at day 15 plus 2% of what is still owed at day 30, then they will charge 4%. Okay, so 2% they were not charging for 15 days, but if it is still pending till 30 days, they will charge 4% directly. Okay, in most cases this will result in a 4% penalty. Mainly what happens if there is a new company, okay, there is some changes happening in HMRC, or there is some changes due to law. Okay, these kind of scenarios will be in favor of taxpayer. Okay, that time HMRC gives a little light touch, as we have seen. Each late payment penalty assessed will be subject to it. Like in India also, we have seen the government can extend the deadline for 3 more months or 6 more months. They will ask us to complete. Okay, and then new rates will be applied. Similar kind of thing. Each late payment penalty assessed will be subject to an appeal by the taxpayer. Okay, they can appeal on all the penalties. They can challenge an assessment both internally at HMRC and through an appeal to the court. Okay, as I said, the grounds for an appeal can vary, but they must include a reasonable excuse for missing a filing deadline. Okay, the appeal procedure will be the same as for an appeal against a tax assessment on which the penalty is based. Okay, interest harmonization. This is something which is explained on the local law uh, perspective. Interest harmonization is a set of rules that ensures interest is charged and paid consistently and automatically in all cases where amounts are paid late or overpaid, bringing VAT in line with other tax regimes, including ITSA. Late payment interest is charged by HMRC as a form of recompense for the use of money owed, ensuring fairness by preventing those who do not pay on time from gaining a financial advantage over those who do. Similarly, where amounts are overpaid, HMRC pays interest on the excess. Okay. Application of new late payment and repayment interest charges. HMRC will charge late payment interest on tax that remains unpaid after the due date. Okay, regardless of whether late payment penalties have been assessed. Late payment interest will be charged from the date the payment was due until it is received by HMRC. Late payment interest will be calculated as simple interest at a rate of 2.5% plus the base rate of the England. So now we have seen it is 5% around, right? Okay. So this was for last year. That's the reason 2.5. HMRC will repay will pay repayment interest on any tax due to be repaid. The difference between the amount due and the amount paid. So only on the difference, not on the entire amount. Whatever is pending with HMRC. From the last day the payment was due to be received or the day it was received, whichever is later until the date of repayment. Okay, till that period, HMRC will pay the interest. RPI will be paid at the Bank of England base rate less 1% with a minimum 0.5%. So this has increased to 2.75. We have seen that.